Trading psychology is not why trading is hard. So many traders, gurus, furus all over social media will tell you that the reason trading is difficult is because your emotions are difficult and learning how to deal with drawdown is the ultimate key to trading success. And I'm here to tell you that that is absolute BS. The real reason that trading is so difficult is because it is truly very difficult to find a consistent and reliable edge in the financial markets. People often make the mistake of thinking it is easy to predict what the market is going to do next, but in fact, it is very difficult to do on a consistent basis. In this video, you'll see a key clip of me during a live stream discussing this topic in more detail, and I show you the analogy of the coin. And with the analogy of the coin, I talk about the idea that if you had a coin with a head side and a tail side, and it was a 60% probability that the coin would land on heads, and you had that for sure, a 60% probability, you would bet over and over on the 60% probability or the head side. It would not be psychologically difficult to consistently bet on the 60% probability because it's, again, over time going to rule in your favor. As long as your trading size was appropriate, you're going to make a substantial amount of money just by continuously flipping the coin. The psychology of that is relatively simple. If you had a coin that had a 60% probability, it would then be easy to psychologically keep flipping the coin and just betting small because eventually you know you're going to make a considerable amount of money. The reason that the analogy of the coin is so perfectly fitted for trading is because in trading, it is very difficult to find the 60% coin. If you had something that had a defined, easy to approach edge, trading psychology would not be hard. The hard part is finding a system and strategy that is consistently reliable, and it is way harder than meets the eye. So check out this full clip where I ranted about this because this is a critical topic to becoming a profitable trader. Most traders will just make the excuse of saying, trading psychology is why trading is hard. I just need to keep my emotions in check, when that is absolute nonsense. You need to focus on finding an edge and then putting small enough position sizes so that you can emotionally regulate yourself to keep placing trades. A great trader should not be afraid of placing their next trade. They should feel confident in every trade that they're placing because the size of their trade is small enough to endure drawdowns and the edge over time will play out in their favor. Check out this full clip. Rate cuts, more probabilities for rate cuts is more bullish for stocks because, again, it means the consumer can go borrow money cheaper. It means stocks and companies can borrow money cheaper. But please understand something. If the Fed cuts in September, just because they say we're announcing a rate cut, it doesn't necessarily need to move the market. Why? Because you're talking about it, I'm talking about it. We all know what's likely to happen before it happens. The market is forward looking. So whenever you are looking at the stock market indices, this always throws people off. A very common beginner mistake when it comes to fundamental analysis is, hey, the Fed cut rates today. Why isn't the stock market going up? Well, it's because the market is looking ahead. By the time we get to September, guys, it's going to be almost certain that we know what the Fed is going to do. And if you're almost certain about something, is that going to make the market move a lot? No, it's not going to move the market. What are we not certain about? That's what moves markets. What we're unsure about, when we're uncertain, what we don't know fully about, that is what makes markets move. And so what we don't know is, are we going to get 3 cuts this year? Are we going to get 2 cuts this year? We know we're going to get 1. Like September is pretty much locked in. I mean, something could drastically change, and that's where you get those some very outsized sudden movements. Those could happen, but just because if they cut in September and the market already expects it to cut, it's not going to move the market. The market already moved based on September, right? The market has been moving based on September. The market always looks ahead. It's looking at what they're going to do in December, what they're going to do in November, right? It's looking at future decisions and future possibilities. It's not looking at what's happening today, because by the time today already shows up, people have figured out what's likely going to come. That's why the market's so smart, and that is why it's hard to be a profitable trader. Yes, trading psychology is important. Yes, don't over leverage. But those are beginner things. Those are novice things to master, is learning risk management and trading psychology. What's very difficult is actually finding an edge and outsmarting the market. It's very difficult to do because the market is wicked smart. It's really, really intelligent, and it picks up on what's happening, and it figures out what the future is likely to be before it happens. It's not perfect. Otherwise, I wouldn't be trading. If I thought the market was fully efficient and perfect, I wouldn't be trading, because if you believe that the market is perfectly intelligent and super efficient, then there would be no room to beat it. But I believe that it is possible to beat it. It's just certainly not easy. I would say the market is very efficient, not perfectly efficient. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in NVIDIA shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. The market is not intelligent on its own. It's rather there's a reflection of the trader, the way traders all over the world reacts to data. Well, the market is the collective of the smartest traders in the room. Ultimately, when I say the market, I'm referring to the marketplace of traders, right? And the market is super intelligent. It is very difficult to beat the market. And that is the real reason. On social media, you always hear, oh, trading is hard because you got to manage your emotions. Yeah, but that's easy peasy compared to figuring out how to actually predict markets better than the market predicts itself. It's hard to do. Everybody thinks it's easy, right? Everybody looks at the chart and they're like, oh yeah, it's easy to determine which way it's going to go or what it's going to do next. And it's kind of like a slot machine at a casino, where a slot machine looks easy and fun. And if you know, the numbers don't lie. It's same thing in the trading world. Most people lose money in markets because it's hard as you know what to determine what markets are actually going to do next. It looks easy. That's why a lot of people call it the greatest casino on earth, or the biggest casino on earth, is because it's deceiving in the way that it looks like you can predict what the market's going to do, when in reality, it is ridiculously hard to do. Is it possible? Yes. Can you make educated guesses and make money in trading? I'm not saying it's impossible. I do it. Otherwise, you know, if I thought it was impossible, I wouldn't be here. But it's certainly not easy, and it's certainly harder than beginners believe it is, right? Beginners have the worst learning curve ahead of them because they think it's easy. People who have experience know it's hard. It's that like learning curve where U-shaped stuff, right? Where this is what trading journeys look like. Actually, I should say it really starts like this. So when traders first get into trading, they believe it's easy. Then the more they do it, the more they're absolutely humbled into the point where they think, holy crap, trading is ridiculously hard. They thought it was easy when they started. You have so much confidence when you start trading. And if this is you, by the way, let me know in the comment section. It was me. So I'm telling you from personal experience and from the thousands of, comments on YouTube that I've gotten over the years. This is the story of the average trader. Yeah, there's an expression, there's a concept, Thomas has got it, the Dunning-Kruger effect, right? When you start in trading, you think it's easy. You learn more and realize, wait, this is hard. And then you learn more and you're like, this is really hard. And then you keep learning and you realize, oh my gosh, I'm a moron. And then you realize this thing is so hard, I don't even know how anybody makes money in this. That's this point right here. And at that point, a lot of people, the people who don't truly love this stuff, they quit over here, they quit over here, they quit over here. But a lot of people quit right around this point because they realize, holy crap, trading is hard. And again, it's BS. It's a cop-out to think trading is hard because trading psychology. I am very adamant about that. That's not why trading's hard. If you had a coin, right? Let me ask you this. You want to hear the biggest stupidity around trading psychology and why I think it is such a dumb cop-out and why I'm very passionate about the subject? You have a coin, okay? Picture you have a coin and it has a 60% chance of hitting heads. And you have somebody who wants to take the other side of your bet. You're going to bet over and over and over on the 60% side. Who wouldn't? It's obvious. It's easy, right? Trading psychology is stupid because, okay, it's not stupid. Trading psychology is important. Don't get me wrong. But using trading psychology as the reason why markets are hard is so stupid, because if you had a coin that had a 60% probability of hitting heads, you would flip that no problem, and it would not be psychologically difficult to bet small and just keep flipping the coin. Eventually, you're going to make a ton of money, right? It's easy. There's nothing difficult psychologically about this. If you had a 60% probability of flipping a coin and it's going to hit heads, and 40% chance it's not going to hit it, and you know that, and you can just see it every single time, over time, you're going to make way more money. Psychologically, that's easy. There's nothing hard psychologically about that. But what's hard about markets is that if you're good in markets, like really good, you might, with years of experience, you might be able to get 55% with years of experience and years of hard work. That's why trading is hard, because finding edge is so much easier than it sounds. It's so much harder than it sounds. That's why trading is hard. Trading is not hard because of trading psychology. Trading is hard because it's hard to find an edge in a market that is wicked smart, and everybody wants to do the same thing. Everybody wants to make money in the markets. Everybody wants to make money in the markets. You have to take money from someone else. You have to be better than the rest. That's not easy, because there's some brilliant people that are trading and investing in the financial markets. You're trying to take money from them. You think that's going to be easy? Heck no. Assets are priced pretty close to what they're supposed to be priced at. That's why it's hard. So when you look at the price of gold and you say, oh, gold is overpriced because it's hitting a level of resistance. Come on, man. Do you think it's really that easy? Do you really think that trading is hard because psychologically sometimes drawdown's not easy? No, that's not why trading is hard. It's because you think it's overbought here, and maybe it is, but it's not that simple. Maybe there's new data that tells us actually at this price, now it's underpriced and it's going to explode higher, right? So that's why trading is hard. That is why trading is hard. Okay? I know somebody just heard that rant and that might have opened up your brain to that. That was eye-opening to me when I realized the real reason trading is hard is because it's hard to predict where the markets are going to go, not trading psychology. That is a cop-out that will keep you back for years. Don't let it do that to you. Trading psychology is easy once you just risk small. If you're risking big, yeah, you're going to trade like a moron and you're going to be super emotional about it. That's easy fix. Trade with a minimum trade size, see what it does to your trading psychology. It's easy. What's hard? Actually predicting where the market's going to go. That's hard as anything. Not easy to do. Okay? So I know I just ranted hard on that, but it's a really important topic. And if you are going to become a profitable trader, the sooner you accept what I just discussed, I think the better off you'll be. People, Bashis, I kind of agree. Risk management fixes a lot of psychology. Dude, I'm telling you what, if you struggle with trading psychology and you trade Forex, for example, use a 0.01 lot size. See how much easier it gets. Trading psychologically gets so much easier if you just have a small trade. Most people's problem trading psychology, they're just calling it trading psychology as a way to excuse the fact that they're just risking stupidly, right? Don't be that person. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.